Hello traders and welcome to another video review. Today is Thursday, April 21st, 2022. Let's start with the Forex calendar. Consumer price index data from the New Zealand for the first quarter had been published overnight, and data disappointed the expectations because the actual reading was 1.8%, which was worse than 2% forecast. However, it's still better than the previous reading of 1.4%. During the London session, there isn't much market movers. However, there are some data are scheduled for release, and the most important from this data is the consumer price index and core consumer price index data from the Eurozone, scheduled for release at 11 o'clock. Consumer price index is expected to stay on the level of 7.5%. During the New York session, we got unemployment claims and continuing claims together with the Philadelphia Fed manufacturing index data scheduled for release at 2:30. As you can see, the unemployment claims are expected to decrease from the 185,000 to 177. So there's a slight drop in unemployment claims. However, the rest of the data looks as not really like a market movers at all. The Linux index and the natural gas shortage change, not really a market mover. However, we got the Federal Reserve Chairman Jerome Powell speech scheduled for release at 5 p.m. and 7 p.m. So those events might be a market movers. The chairman of the Fed might say something really important or give a clues whether the Fed's policy will be maintained. So I think we should take a look at some data, especially at some charts, especially connected with the American dollar. Let's start with the Japanese yen and American dollar. Daily time frame chart of the USD JPY is still showing us a strength of the bullish trend from the levels of 115. Current swing high was made at 129.41, almost 130 level was hit. However, there's something I would like to point out. This strong move to the upside looks very, very bullish, of course, and we got only a few red candles. This is a daily time frame chart, so almost every day it is a bullish activity, right? So we are buying the US dollar and selling the Japanese yen basically day by day. However, despite the fact that this RSI is very, very positive, it of course hit the extremely overbought conditions. Again, we used to have this situation at the end of the March, and now we have this situation again at the at today's date, 19th, 20th of the April. So almost 1 month apart are those two tops here. So those are almost equal. This one is slightly lower than the other one, right? So this is not something I want to do, but this, you see, this one is just slightly lower than the previous one. However, what I mean is that this is a clear bearish divergence, or as they say, negative divergence. This market is clearly making a new higher high. The RSI, which is the momentum indicator, doesn't do a new higher high, and the momentum does not confirm the recent move from 121.28 towards the recent high 129.41. So what it actually means, it means that we should expect a drop, or we should expect a correction in the US dollar, on the US dollar market quite soon. So we got a piercing pattern here on a daily time frame chart. However, we need a confirmation. We need a second red candle here in order to confirm this pattern, and then we can expect the drop towards the level of 125.80 and 125.15. Let's now take a look at the New Zealand dollar. after the data had been published. What's happened? Well, we got a very interesting situation here. The recent few days this week had been bullish. Apparently, we got the stopping candle at the end of the downtrend around the level of 6,719, and then we have a very big bullish engulfing candle. This candle engulfs almost 3 previous candles with a local top, local high at 6,810. So we broke above the technical resistance at 6,804. However, there's no close above this level, so we should wait for the close above this level to confirm this rally. Momentum is bouncing from the levels of 35. However, we are still not above the neutral level of 50 with the momentum, so the market is still under control of bears. If we put some trend line here, a short-term trend line, we can see that this short-term trend line, let's just change the color because there is already there's already this kind of a line here on the chart. Let's just zoom in a little bit. This kind of the color, this kind of the trend line, of course, is very helpful during the short-term trading, and it looks like this. So we have like a breakout above this trend line. However, please notice the fact that the trend line resistance is very close to the horizontal resistance, so this area might be a crucial area for the bears, and they might increase the activity around this level 6,804, 6,810. So please keep an eye on this zone, because after the 1 day of the advance, we might see another day of decline or the decreased volatility on this market. So it's very good behavior to focus on a confirmation after this big green candle reversal, because it might look like a reversal. However, we need a confirmation that it is okay, because if there is a confirmation reversal, then we should rally towards 6,857, 6,888, and this means we will test again the long-term trend line, the orange one, and we are back inside the channel after the breakout. However, it all depends on the market reaction on the 6,857, 6,888 zone. So that's the New Zealand dollar. Let's take a look at the crude oil now. What is going on here? And the crude oil is looking exactly as we expected it to look. We got the top for the wave 5, ABC corrective pattern, short-term trend line. We got a ending diagonal in the wave C, breakout started with the triggered with the bullish engulfing, confirmation, rally, and of course the test of the technical resistance at 108.42. So the level of the 108.42 had been tested. We got some kind of a pin bar here on the during the rally. It was made just after the top at 108.79 was made. This is the bearish engulfing pattern, of course. So we need kind of a deeper retracement of this wave in order to confirm that that's the local top, and we should return to the downtrend again, or to the correction to the downtrend again. However, there are still technical resistance levels here on this chart: 112.15, 115, and then we should even put the high of the wave B, which is the level of 116.62. So let's just adjust this coordinates 62. There you go. So this is the very a very strong supply zone, because it's very close to the wave 5 high, which is the high, the highest prices of the crude oil in many years. So please expect the situation where the people will start to sell oil at the levels above the 115, 116, right? So this is very strong supply zone. ABC correction is done. Now it looks like we are evolving into the more complex behavior. a more complex cycle, more complex correction. The behavior of the market looks like there are only 3 waves everywhere, A, B, and C. So this is not a kind of a corrective cycle to the downside, impulsive corrective cycle to the downside. So we should expect more consolidation, more time and more time consuming and more complex correction on the crude oil in the coming days. Last but not least, let's take a look at the Ethereum. Ethereum versus the of course the American dollar is showing us the signs of the decline, and as you can see, we got 1, 2, 3, 4, and 5 waves to the downside after the ABC correction was done at the level of 3,564. We got the technical resistance as well at the level of 3,289. However, right now, after the test of the sub $3,000 levels around 2,944, 2,000 with the low at 2,880, we got some sort of the pullback. Nevertheless, the market dropped from the extremely overbought conditions below the level of the 50 towards the level of 41, and now it's just trying to test the neutral level 50 on the RSI, which means that the market needs to break above the local resistance. Please notice the fact that we got the local technical resistance here at the lows of the 7th of the April, 3,143. So without any clear breakout above this level, we should consolidate a little bit here, and then of course continue the downside move after the 5 waves here had been made. So let me just put the 5 wave to the downside for you, so everyone can see. Of course, this is a very, very small degree wave. So it might look like this, something like that. Let me just change the degree to very, very small, like a sub micro or something like that, and we got this situation on the chart. So correction here, and then another wave to the downside on the Ethereum is expected. The target is seen below $2,400, which is apparently not really appropriate, because we should put it at the lows of the wave B. Low is 2,300. Let me just put this coordinates 2,300. This is the first target during the wave 3 of the down move here. We have finished the ABC correction, I think. We still can evolve into the more complex behavior, complex corrective cycle. However, if we just break below this short-term trend line, the blue short-term trend line, the next target is 2,300, the low of the wave B. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.